Yeah, the dollar has not actually done that well, which is quite interesting in the sense that there's certainly been some degree of repatriation away from U.S. assets. And at the same time, obviously everything is under pressure here. So I think there's certainly places to hide out in the currency markets. I think euro is still an attractive one. Yen is still a relatively attractive one. I worry a little bit about yen, though, in the sense that there's certainly some tariff pressure. There's also a question at a certain point here where how much can bonds continue to rally in this environment, given the inflation risks? Obviously, Powell signaled no interest in kind of cutting rates here. Obviously, if we go far enough here, it becomes just a pure demand shock, and the inflation concerns from tariffs kind of go out the window. But I think for right now, I think the key date here for us to watch is April 9th. So that's when the actual next leg of tariffs go into place. I think if you've got nothing before then, this is just going to absolutely continue to turn into continued downward spiral.
Erik, can we come back to the role of the dollar? Because as you pointed out, it hasn't been performing very well. It has not been the safe haven currency that we would expect it to be in these times of turmoil. And there's one very important reason, obviously, because the source of the tragedy, the economic tragedy, comes from the U.S. There's very little trust, but also what seems to be transpiring in the markets is that at this point, there's no funding, no solvency crisis just yet. Are you seeing any signs of stress in the interbank lending market? Are you seeing any signs of stress there that would imply that at some point the dollar's role as a safe haven currency will come to the fore?
Yes, it's a really key question. And I think right now we haven't quite seen that just yet. So repo seems to be holding in okay. Cross-currency basis seems to be holding in okay. I do think at a certain point, if this continues, you absolutely will see pressure there. So yes, there are more facilities now than there were in maybe 2008. Standing repo facility, lots of central banks have these things. But I worry about things like trade finance, right? A lot of U.S. dollar borrowing from the trade side. Just the value of U.S. dollar assets. The whole world is long U.S. assets, and a lot of that's funded in short-term FX swap markets. So yeah, this continues for another couple days. I would expect to see that start to buckle, and then dollar could start to rally versus a broader set of currencies.
You say if this continues for a couple of days, is there a pivot? Is there a point of stress that you're really looking at? Is it a couple of days of no reaction from the Trump administration, or what would it be?
Yeah, no reaction from basically anyone, which is what we've had, right? The Fed doesn't want to play ball. Other countries, yes, in some extent are making some offers, but Europe doesn't seem particularly interested in negotiating. And by the way, China has taken a pretty adversarial approach so far. Maybe not so much on the currency. They haven't weaponized the currency just yet, but they're signaling they want to play hardball as well.